you have to go back to the basics of company strategy, which is defining who you're going to serve better than somebody else, which narrows down your competitive set,
Sure.
which then allows you to say, how are we going to be different than our competitors for the customer segment? That's the only way to effectively marketing now, which was it was literally invented in the 50s and 60s. People knew that back then. But because the world is truly flat now, borrowed from the book title, and the competition is global and the competition is intense, like you have to constantly be differentiating your product and services. Otherwise you're not gonna be able to compete. And inbound marketing doesn't work.
Hello, I'm Ed Marsh, host of the Industrial Growth Institute podcast. Lately, episodes have been inconsistent and unpredictable against all the rules about successful podcasting. And the reality, I got to say, is that life got in the way, as the saying goes. I'm experimenting with formats and frequency and duration. So please bear with me. Thanks for listeners who are sticking with me. Thanks for seeing a new episode pop up and jumping in to listen to it. Today, I'm really happy to welcome back Pete Caputa into the studio. Pete joined me back over a year ago for episode number 5 of the podcast. And at the time, it was primarily to talk about changes in marketing. Pete is, I got to say, a really interesting guy. He's a chemical engineer by training. He's a salesperson and entrepreneur by temperament. He's a gentleman farmer and soccer player by preference. He was the 15th employee at HubSpot, and he built their channel program, overcoming significant internal resistance, and then, of course, all of the market resistance that you encounter for something like that. For the last few years, he's been the CEO of Databox, where he's really taken an interesting approach, one that I think is particularly relevant for private equity firms and their portcos, and that's what we're going to dive into today. So thanks very much for coming back into the studio, Pete.
Oh, thanks for having me. And I always enjoy our conversations, especially when I can catch you on a Friday afternoon, just bug you for a little bit. So yeah, I'm looking forward to this one on the record here.
There's been a lot of thought-provoking conversations we've had over the years, and I think I've definitely gotten the better end of that deal. I love the way you think about things.
Same.
So what's the most important detail I might have left out of your introduction there?
Oh, I've been working out, Ed. I've been working out. Yeah, so I'm feeling pretty good. Growing up, I never really had to work out. I always was a pretty good athlete. I played varsity baseball and soccer in high school. I ended up playing Division III soccer in college, and then played in my 20s. Whenever I could. Went to the gym in my 20s, and then I got married, had a baby, and joined HubSpot.
Right.
And so my incentives for working out went down because I was settled down with my wife.
And your available time went to zero.
Yeah, my available time went way down because not only was I working at HubSpot at the very early where it was like hardcore startup time investment, but also I was commuting at the time. I couldn't afford to move closer to Boston, honestly. And so I was commuting 2+ hours a day. So yeah, no, my available time. So my 30s, I gained weight, got out of shape. I moved closer to Boston. Like right around, 15 years ago. So like late 30s, and started playing soccer again. And then I just started injuring myself like every season because I wasn't in shape. So I'm turned 49 in November. And so last year I'm like, I gotta do something. So I started going to the gym, and I've dropped 10 pounds and lifting heavier weights and feeling much better out in the soccer pitch. So yeah.
Still drinking craft beer?
I'd still dig an occasional craft beer. Yeah, I can't resist driving by a Treehouse location, as you know, here in Massachusetts, Treehouse Brewery, and picking up a case. So yeah, I usually have that in my beer fridge, and I'll have one with dinner once in a while, not every night. But
and how often are you playing soccer these days?
Well, once a week we play a game. We try to get out to practice. I haven't been getting to practice because I did strain my hamstring, so I've been going to the gym every day instead.
Got it.
Working on that. So, but
cool.
Yeah.
All right. So let's kick off with a quick overview of Databox. What's your value proposition, and how do you deliver on it?
Yeah, it's actually been changing quite a bit. So historically, we've been seen as like dashboard and reporting software, and the value of that is really time savings and presentation quality of the data. So a big portion of our customers were marketing agencies, and they were using us to pull data in from like all the ad platforms, the social platforms, the CRM, marketing automation, even financial tools, et cetera, to be able to present results to their clients. And that was about 40% of our customers. The other percent of our customers, a lot of tech companies, kind of data-driven firms. And in that product, they could set goals, see benchmarks, et cetera. Over the last year, we've really pivoted more towards performance management. And so one of the things we did is build much more robust integrations with sales CRM tools, with service, customer support tools, with financial tools, with databases. We have integrations with like all the major databases at this point. And that allows our customers to do much deeper analysis. And then as of about this morning, we launched 2 new tools in the product in the suite. One is OKR management, so objectives and key result management, and the other is forecast modeling, where people could do what-if scenarios and predict future outcomes and kind of play with their inputs and outputs to determine what kind of results they can produce. So we've been pivoting slowly more towards a business intelligence tool with performance management capabilities on top of it.
And so where your traditional kind of typical buyer was a marketing agency owner who wanted to simplify the process every month for them to report out to performance to clients. Now it could be the CFO?
Yeah, we still solve very well for marketing agencies. It's still like our best customer base.
Mm-hmm.
And like a lot of the stuff we've built helps them as well. But we continue to build integrations, for marketing agencies, et cetera. So we're still very much focused there. Our reporting tool is really slick. Basically, you can create a slide deck, like a slide deck, but with live data in it. So the data constantly updates. So when you would go to do that next monthly report, you don't have to rebuild all those charts or manipulate data.
Right.
So there's a lot of stuff we still do for agencies. But yeah, our pivot is a little bit more towards mid-market companies, 50 plus employees, multiple functions, looking for that overall ability to not just monitor performance, but plan out future performance, set goals in a data-informed way, and then manage to objectives and key results or objectives goals so that they're holding their team accountable across the whole organization.
And potentially do all that without the need for a developer like you might need with Tableau or some of the other tools.
Yeah, so a lot of times you'll need to pull your data into a data warehouse. You'll need to then, manipulate the data in that data warehouse and then push that to a business intelligence tool. We can do that. So we can work with data warehouses. So if a company has all that set up, we can work with that. However, you may not need that if you use Databox, right? Because we have these direct integrations with all these popular tools.
Got it.
So you don't necessarily need the data warehouse. So yeah, so you skip the developer in some cases. And we have sales engineers that can also build integrations and stuff. So like if you don't have the developer, we can solve for that. And then as far as we also try to simplify the analysis portion of it. So making that more point and click, a lot of pre-built metrics, pre-built dashboards, just making the exploration of the data more intuitive. And then also data science on top that we do that you wouldn't be able to do any other tools necessarily or very easily, like benchmarking, like correlating values to see cause and effect, like the forecast modeling, like anomaly detection to determine if something's like out of the ordinary or outside of the forecasted range so that we can alert you when something might be out of whack. So all that stuff kind of just works out of the box. You don't really need to have an analyst sit there and do all that to work.
And what do you think middle market companies most misunderstand about performance data?
I think they suck at connecting it to their strategy.
Okay.
That's the biggest frustration I've had. We, as a SaaS company, we're able to measure how our customers use our product down to the nth degree, right?
Sure.
And we can very clearly see patterns between companies that, one, stick with us, and two, have better results because we're literally monitoring their performance, right?
Right.
And so they tend to do 2 things better and do 2 things that a lot of companies skip. One is taking your time at least annually to revisit your long-term strategy and then determine your short-term strategy from it. And two, turning that strategy into objectives and goals that you then hold the team accountable to, but also review on a regular basis in order to revise the goals and your model so you know that you're making the right investments and also managing, margins effectively. And so what we find is that there's a lot of companies that just kind of like, yeah, we're going to do this thing and we'll see how it goes. We'll measure it, but like they're not really thinking, does that help us serve our customer better? Does that help us compete more effectively against a competitor? Right? Does that lean into our strengths and leverage our strengths to deliver more value? Does that are other weaknesses that are preventing us from competing in the market? Right? Are there opportunities in the market that are coming because of market trends or technology changes or whatever that we should exploit?
Right.
And the flip side of that is there threats, right? Are there threats as a result of market conditions or technology changes or whatever?
There's also the challenge of Goodhart's law, where basically when you pick a KPI to monitor, that impacts behavior. And I think that goes back to the premise of the Amazon Weekly Business Review.
Yeah. I'm not familiar with either of those. What was the name of it?
Goodhart's law. So, an example is if you tell people we're going to measure sales success by the number of quotes, then guess what? They'll call people up and say, hey, do you need a price? And they'll issue quotes. Whereas what you wanted was qualified opportunities.
I think I might have edited it out, but I actually, as you know, I just wrote a course. And in there, I talked about over-optimization on a number. And one of the stories I tell from the HubSpot days is marketing was measured on their ability to generate demo requests. Or we call them MQLs, marketing qualified leads. And so they would put out an ebook on social media marketing. At the time, we didn't even have any social media marketing capabilities in the product. So it was really difficult to go from like that lead to a sales call. And so what they would do on the thank you page where they gave the ebook PDF link, they would put another form that said request a demo. And so people would get to that page, wouldn't see the link and they would see the form and they'd fill out the form again, thinking that they were getting the ebook. So we'd get this lead and they're like, hey, you requested a demo for HubSpot. I'm like, no, I was trying to get an ebook and I couldn't get it. You guys suck.
Right.
Yes, that's Goodhart's law in action. Goodhart? Yeah.
Yeah, Goodhart's law. And then the Weekly Business Review is what Bezos came up with to basically make sure that the KPIs that they tracked were the ones that predictively helped them impact the business, as opposed to, vanity metrics.
Yes. Yeah. I talk a lot about correlations in our course, and it's the same concept as that. I didn't know that. A little bit of history. That's excellent. But yeah, same thing. It's like, so in any process, you have inputs, which are what you invest, time or money. And then you have outputs. This is the work that you complete. So like in sales, it's the number of dials or number of calls you have, right? And then there's your outcomes, in which case it's in sales again, it's deals closed. And you can do that almost with any process. And by setting those things up, you can then sit there and say like, well, some of those outcomes are leading indicators like deal creation or deals qualified, right? That's a leading indicator. And so now I want to look and see like, is the correlation between the calls I'm making and the deals I'm creating steady, right? And then of course, is the correlation between deals created and deals closed or close rate steady? And if I can see that those things are steady, then I know that my work continues to hold up, right?
And then further, of course, compare it across people and figure out
absolutely.
if somebody's better or worse than the average on the team.
Yeah. The other thing that I introduced in the course is the idea of a correlation value. And if you've read any statistics book, you would know this, not you, but like you, broadly.
I am not a statistics person, so educate me.
It's a simple concept. I know you'll be able to get it. So in statistics, you could say that something has a correlation value from -1 to 1. And so 1 means it's perfectly correlated, which never occurs. But like, you can have some metrics that are really highly correlated. Like, for example, for years, our organic search traffic was highly correlated to our sign-up volume.
Right.
Because most of our sign-ups came from organic search. And so that was correlated at a very high rate. And then you can have negative correlation where it's like you do some work in it or something happens or doesn't happen and it results in a different outcome, the opposite outcome. So by measuring correlations between two different metrics, you can see relative correlation. So you might look at it like your marketing channels that way and say like, hey, we see a strong correlation between our organic search traffic and our signups. So we see a weaker correlation between our outbound prospecting and our signups, right? So, and this might not be the perfect examples. We get the idea, and then you can start to say, okay, well, we should invest more in this versus less in this. Or,
but how do you
hey,
back up? I mean, how there's a possibility in that example that you used that you've got superstar marketers and you've got weak salespeople, and so it may not be inbound versus outbound. It could be the quality of each, right?
Absolutely, yeah.
And so how can you? I mean, all data does really is prompts you to ask questions.
Totally.
And you got to know what you got to be creative in the questions you're asking, I think.
Yeah. Like you have to be in the coal face. My old boss Brian Halligan used to say it all the time to managers, like, "Are you in the coal face?" And I assume you know what he meant, but like, is your face black from soot, basically, because you're on the front line talking to customers or talking to the team that's talking to the customers,
right?
And making sure that you're in tune with what's actually happening there, and you're observing things, not just measuring things, but observing behavior. And you got to tie those two things together. If you're looking at data in a spreadsheet and you're not asking like, well, what's the process they're following? Is that world class? Is there a better way to do that? Or we have the right people doing that work? Is the quality enough?
Right.
Like you can't measure everything in a spreadsheet. Yeah.
You've alluded to this a little bit, but I've watched you since you've been the CEO now for what, 7 years?
9
years. Holy mackerel, you're coming up on a decade.
I know, right?
So I've watched you go through these phases, not you personally, Pete, but the company. So initially it was this reporting tool to simplify the process of creating dashboards. And then I saw while you were continued to create native connections and templates, you made a significant shift in how the company marketed it itself. I'm sure you kept your eye on the product ball, but I saw a big change in the way the company innovated around crowdsourced content and then proprietary research and benchmarking, which was really prescient because now many say that's one of the keys to ranking for LLMs. And then you kind of pivoted back into the product, creating a lot of capability around forecasting and prediction and beginning to introduce the AI and the business intelligence stuff, which I guess I've heard you talking about, but now is officially launched. And then you're actually offering a course to companies on how to scale growth using your Spears framework that really kind of helps them go to the other side of the data and say, okay, we've got this data, but how do we work with data effectively? Am I correct in observing this evolution and where the company's focused?
I was just going to say you're very observant. You've tracked our evolution pretty well. It's over a long period of time. It's when you repeat it back to me, I feel like, oh man, we're really all over the place. But it was over 9 years, so I guess it's just the evolution. Yes, yeah. Some stuff works well from our business perspective, from a customer perspective. Some doesn't. So like, you got to keep trying different things sometimes, right? But yeah.
But yeah, it's funny. You may have heard that represented some chaos. What I see as you've executed it is a very thoughtful exploration of data, a hypothesis, an experiment, and then little tweaks, but a lot of persistence and determination in actually executing through the hard, frustrating time to actually get to the benefit.
I appreciate that. Yeah, that is how it feels.
All right. So talk more about this BI era, this BI development.
So we kicked this off like 18 months ago. So it's like old news to me, but now, we realized that in the mid-market, like more and more companies have developed proprietary processes that they're now modeling in their software, specifically like CRM, financial software, their own databases where they build stuff. And as a result, like there's no one way to measure a business, especially once you get past, say, 50 employees, because everybody's doing things a little bit differently. Like in our business, for example, right? Like we went from primarily an inbound marketing, lead generation, sign up for a free product, product qualified lead turned into a deal. Like, and that was the majority of our funnel. But now I have 3 funnels. Like I have that, which is still the majority. And then we have our channel funnel where we have partners that sign up. Some of them buy, some of them just go right to reselling, but I got to track that. Then I have the outbound prospecting. We have this whole like process where we're connecting with people, not to pitch them our product, but to engage them with in contributing to research and getting access to that research. And so like we have this whole process that involves social media. So like there's so many moving parts there and so many things to measure that like there's no way I could do that without having custom data set up in our CRM,
Right.
in some tools that we've built, et cetera. And so then in order to measure that, I need custom data. So that was, what we observed with customers, and then also our own evolution is we just needed to improve our ability to ingest large volumes of data in a structured way, so that our customers could then basically build any metric that they want and then start to correlate, start to model, um, um, set up, alerts and things like that
Right.
to monitor. So they couldn't do that without all that, us improving the way we pull data in and store it.
So we talked earlier a little bit about how this changes your ICP, kind of from the marketing agency owner to really an in-house business strategist and operations person in many ways.
Yeah. So our ICP is like that. We just to be realistic, we set it from 25 to 250 employees, mid-sized business. Tech companies is the main focus because they tend to be both more receptive and interested in using our product, but also more capable to use our product. But then it gets really complicated from there. Our personas are broad, as the value of our product is to view all your company performance data in one spot. So therefore, the main driver of that is the C-level, usually the owner or C-level, CEO even, is saying, hey, I want to be able to manage performance better. And so then there's often a directive to their functional managers, like, get us organized, get all our data in one spot, right? And so then it falls on a functional manager who's not necessarily tech savvy or even an analyst necessarily. And so oftentimes then it gets delegated to an analyst or a developer to figure out, and sometimes even to individual contributors who are maybe just tech savvier than the rest of the group. So we have like, our funnel is so crazy in terms of who we're actually talking to once they start implementing our product in a trial.
That trend or the high level interest is really what we're going to come back to in a minute when we jump into basically what I would call the owner's interest, which could be the CEO, but it could also be the board as represented as the owner. It could be the private equity firm that owns them or investors or whatever.
That's right.
First, I want to pick up on one of the things you said earlier where your third funnel that you described was this essentially social media driven, which I assume ties into your extraordinary activity and I think success, I gather, on LinkedIn.
Yeah.
So number one, you're a CEO of a mid-sized company who's doing all your own LinkedIn. But number two, you do it according to a very carefully crafted process and strategy. Talk about that a little bit.
That's right. Yeah. So I am kind of the tip of the spear of our marketing strategy. And all my activity is really on LinkedIn, although I do podcasts and I record some podcasts, et cetera. And I put out a newsletter. So I guess there's other stuff that I do, but like my main activity is LinkedIn. I post at least once a day, on average. If I look back, it's about a little more than once a day. Some days I'll post 3 or 4 times, which is kind of against the recommendations from LinkedIn people. But I don't worry too much about the algorithm. What I care about is that I'm connected to people that care about what I'm writing about, and then I'm consistently doing the work and consistently sending similar messages out. So, and engaging those people. I want to talk to those people, not just like talk at them. So yeah, that's a key part of our strategy, and we're really leaning into that. Getting the whole team, the whole sales team, doing more of that work, not just publishing, but also reaching out to people and engaging them. The very specific process that we developed that allows me to do it at scale without spending my whole day on it is that we really prioritize primary research. And we do it in a variety of ways. One way is we are constantly doing research reports where we set up a survey and we ask people to answer the survey, and then we aggregate the data. We gather quotes from those respondents and feature those quotes in our content, as well as the aggregate data anonymized. And so that's one big piece of it. But we also have our own podcast where we record people and put out snippets, right? And we also do customer case studies where we're asking them, about their experience with Databox and what it's enabled them to do. And then we work with our solutions partners also to create content. So we have like 100 plus out of the box integrations, but which we're not experts at, but they are in some of them at least. And so we ask them to record videos that we then share as well. So like, and it's a video of like how to measure something in Databox, and then sometimes even how to improve those numbers.
Mm-hmm.
So it's educational in nature while showing off the product. But we're learning as we do because these are topics that we may not have expertise in internally. So by the combination of all that research, I'm able to publish original content, that's my thoughts and I'm filtering it through my experience, but I'm citing other people's thoughts and statements.
But it almost always incorporates a rather provocative position that you stake out related to that.
Yeah. Yeah. So the beginning of the quarter, and we've evolved to this. In the beginning of the quarter, we prioritize 3 campaigns that we're going to run, and those usually include multiple offers. It could be the survey research report. It could be a webinar that we go through that data. Could be templates in our product that align to the topic so that people can go from like learning about what metrics they should be measuring in an AI world to actually implementing it quickly. And so we come up with those campaigns. So when we're doing that, we try to pay attention to trends in the market, things people are talking about. And oftentimes that is provocative because it represents a change in the status quo.
I mean, take for instance the fact that your primary ICP for many years when you started with Databox was marketing agencies, the people that you built the relationships with when you were running channel at HubSpot. And lately, I would say over the last 18 months to 2 years, we've seen a lot of stuff coming out of SparkToro on effectiveness of organic and a lot of different sources. And you're out there saying the days of the typical inbound marketing agency are numbered. So you're actually delivering.
I was saying that like 4 years ago, but yeah.
So a very unwelcome message to your very first, basically ICP. You're willing to stake out that ground.
Like you've seen it, there's very few inbound like companies out there that label themselves an inbound marketing agency. They've all pivoted to something else at this point. And I was saying it when it was unpopular. Like they were still running an effective, profitable business off of it. But you could see that it's not just that search changed, like social changed.
Right.
Blog, like everything changed. The email changed. Like there were so many changes in the way you had to market it, and more of it was like that the world just got more competitive.
Right.
There's more companies doing everything, anything, like each thing,
and they all do it pretty well.
Yeah, exactly, and they're all saying the same thing. So you can't do inbound marketing in a world where there's too much competition in that market.
Right.
You have to go back to the basics of company strategy, which is defining who you're going to serve better than somebody else, which narrows down your competitive set, which then allows you to say, how are we going to be different than our competitors for the customer segment? That's the only way to effectively marketing now, which was it was literally invented in like the 50s and 60s. People knew that back then. But because the world is truly flat now, borrow from the book title, and the competition is global and the competition is intense, like you have to constantly be differentiating your products and services. Otherwise you're not going to be able to compete, and inbound marketing doesn't work.
All right. So that's a decent segue. And in order we're going to pivot to private equity. I'm going to have to talk for a minute to kind of set this up to make sure that I think we're looking at it the right way. So the problem that I've frequently observed in my work with lower and middle market industrial manufacturing companies, the portcos and their sponsors, is that the sponsors tend to buy a company with the expectation they're going to build it around an investment thesis. It's essentially a narrative that explains how they're going to increase value. Some of it's going to be based on financial improvement. They'll tighten receivables and payables and lending arrangements. Some of it's going to be efficiency through operational improvement. And they've got a lot of Six Sigmas and black belts and people with that expertise. Then there's going to be inorganic growth. They'll bolt on some adjacent and related companies. But then finally, there's the organic growth piece. And so that means mostly new customer acquisition and price increases. And the playbooks for the first 3 are pretty well written. The fourth one it's in my experience kind of assumed, but it's harder and it's more problematic than they assume. And that then is where it starts to get tricky, because they often don't have the data insight that they need from the portco management. in order to proactively understand and adjust. And further, it's often across their portfolio, it's often different information in different formats from each of the companies. So there's no consistency looking at it at the portfolio level. I believe that the power of Databox is that regardless of what CRM their portcos are running or what marketing automation or whatever software they have, they could quickly create the insights that they and their management teams need to proactively manage revenue growth across marketing and sales and customer success across the companies with dashboards and historical and predictive KPIs and understanding of trends and changes. And then basically as part of integration, roll that out and in fact create roll-ups for the units and for the portfolio. So let me pause there. I mean, what's your reaction to that thesis?
We have a handful of like PE firms and smaller VC firms, and and then a handful of like roll up companies where they've acquired a handful of companies and like keep them independent, sort of, but have an umbrella.
Right.
So we have a handful of companies that use us for that. The ability to have the visibility across the companies and roll it up, like you're talking about. They found us because we built functionality for marketing agencies to do similar things, right? Because the marketing agency is going to have 10, 20, we have some agencies with thousands of clients.
Wow.
And so in order to manage that, they need one place where they can see all the data from across all the ad platforms, social platforms, CRMs, et cetera. And so anyways, as a byproduct of that, we found a few PE firms and VC firms that found us and do the same thing. So like the use cases there, so I explored that market a little bit, and I found that there, like a lot of PE firms and VC firms don't pay attention to the performance of their companies very closely.
I think that's absolutely correct, but it's biting them all in the ass right now because, they bought all these companies in peak COVID, valuations were high, EBITDA has not grown. In some cases, it shrunk. They're delaying exits, and there's a lot of angst that's resulting.
I see. Yeah, so I'm not. We tried to explore that channel a little while ago, and I was like, I had way too many conversations that went nowhere, and I just said I'm going to focus elsewhere.
Got it.
But I see what you're saying, and that totally makes sense. Yeah, like I think, especially with AI now, I feel like we're moving to a world where businesses will be managed a little more like hedge funds are managed.
In what way?
Right. So, especially like the instant like the instant trading hedge funds, where decisions are made more autonomously is not the right word, but like they're made algorithmically, I guess is the right word, based on the data, and so that world lends itself to this opportunity, I think, where a centralized team could be managing not just the results and tracking things, but managing the innovation process to some degree, where they're really not just like getting a report from and pushing the management team of a independent operating company to like innovate, but like literally saying, hey, these are the things we think you should innovate, and then here are decisions you should be making on a daily, weekly, monthly basis based on this data that we're seeing. So I think that will happen more and more. We've seen the rise of SaaS over the last 10, 20 years, where more and more processes are digital and therefore trackable. And then we're going to see, I think over the next few years, I don't think it'd be 20, but I think the next 5 years, where more of sales, marketing, customer support, especially, will move in two different directions: either self-serve, where the customer kind of serves it themselves, or agentic, where agents will do more of the work that humans usually do internal to your company, more of the work the sales team or the marketing team or the customer success or support team would do. So I think as a result of that, both of those things, like in a self-serve model, you can measure your customers much more closely, or track your customers much more closely, and see what they're doing and how that correlates to their purchase, their success, their retention. And then in an agentic world, again, you're able to, of course, measure everything because it's all done by computers. So I think in that world, more of the innovation process actually occurs in a trackable way. And so therefore, there's more opportunity to have some really smart, innovative, quantitative people directing more. And so I would think the PE firms would want to build more of a core team centrally that's helping those teams operate and almost instructing to some degree what those teams should be doing.
Right. All right. So interesting background. Let's run through a couple of the problems that I predict might arise. First, one of the things I find in working with sponsors is that despite having really impressive financial and operational acumen, there's often a gap around marketing and sales. And for instance, in many cases, they've never even run through the funnel math or what I call sales math to kind of quantify what's required working backwards from their value creation milestone and the sales target all the way back to the prospecting activity or lead generation that's necessary to drive it.
There's still companies not doing that?
Companies run by brilliant people with extraordinary academic credentials and business acumen.
Okay.
Yes.
Yeah.
Absolutely.
It's so hard for me to fathom because I was doing that in, 2001.
Right. So no matter how beautiful the data out of Databox, this is not going to help them understand sales.
Yeah. Right.
All right. Second, often forecasts are, you might say, wildly inaccurate because sales process is poorly defined, the ICP is poorly defined, the buying teams aren't understood. The companies tend to focus on selling their product or service rather than the business outcomes of customer problems. The consultative sales is often rare. It's based on product pitches in many cases. The opportunity qualification is cursory. So it's kind of garbage in, garbage out. If they're not putting in quality data, they're not going to get quality insights, right?
Yeah. No. Yeah. This is a problem I see. I actually see this one. Yeah. When I dig into customers and talk to customers, I can tell that the ones that are successful are the ones that are spending the time doing that stuff. The ones that aren't, skip that. They just basically, some years ago, they came up with a compelling product or service and they just stick with it and they're just going to do tactical stuff to try to get new customers or grow those customers. And they're not thinking through how do they add more value to those customers? Are those the right customers, et cetera? So yeah, agreed.
And how about fundamentally the question of whether or not salespeople use CRM consistently?
Okay. Yeah. No. Data is a problem. If they're not using the product or they're not putting in data that's not accurate or they're gathering data that's not complete, the data becomes not a very good predictor of future outcomes. Yeah.
And then IT people, I'll admit my bias. They stand my hair on end. I find that they're often, if we talk about Dweck's growth versus fixed mindset, they tend to be very fixed mindset. There's an important job. They have to make sure nobody, creates a security problem. They have to make sure that
their job is largely safeguarding the health of the company, not the growth of the company.
So they resist anything that represents a risk to them. They also resist things that might allow other people to get their camel's nose under their tent and they lose control. They like having very tight control for their own reasons. How do you answer that?
Yeah, I think it has to be a C-level initiative if you're going to be more data-driven and more, make decisions based off of data. Like to battle through all those things, like you have to implement processes that are followed. You have to audit. You have to make sure that people are using the systems as you ask them to in order to gather the data. Or oftentimes it's just a byproduct of their work. In this case, so it's not even that hard anymore. But like all that stuff has to be asserted, by someone in authority, and then I think in terms of like getting through the IT roadblock, there has to be that business case. So that the IT team can realize, like, all right, well, we have to figure out what the risks are, but we'll have to solve for them, not block this progress, right? Yeah. So I think the only way to transition from a loosely run organization to a data informed one is if it's coming from if the top believes in it. I was talking to a sales leader the other day. He didn't hire the sales team. He inherited them, and they won't use the CRM. So like he used the CRM because it's a small team, so he's doing a lot of the selling as well. But the CEO won't make them use the sales team.
Wow.
And so like he's not only like is he not not asserting authority, he's undermining the authority of the guy he hired.
Right.
So yeah, I can imagine that happens quite a bit.
The most extreme case I ever saw that was a company where the salespeople, not only would they not use a CRM, they didn't even get one. They didn't even have spreadsheets. That's the other solution I often see. But in this case, the sales reps would not even use the company exchange server. They used LinkedIn to send messages to their prospects and buyers so that the company couldn't track what they were doing.
Wow.
Yeah.
They went that far. That's crazy.
Yep.
Was it like an old industry where there were more,
Yes.
like their relationships that they brought to the table?
Well, they thought they did. I mean,
Yeah, right.
But
Yeah.
anyway, all right. So those are some problems. I think there's also some benefits beyond just kind of the stuff that we've already talked about. So often a sponsor comes in, they try not to disrupt too much. So this is a way that they might be able to get the insights they feel like they need to manage and grow and oversee the company without causing a lot of disturbance around, generating a whole bunch of new internal reporting. So basically when a company gets purchased, often the new owners have promised, hey, look, it's going to be okay. We're going to take care of you. It's not going to all change. And so then if they come charging in with a list of 17 new Salesforce reports they want created, then people say, oh, wait, you told us.
Yeah, I don't recommend starting there. That's actually why I wrote this new course in methodology. And in the course, I won't give you the whole thing, but there's 5 steps. It's strategize, plan, execute, adjust, repeat, and scale. And you can't skip to scale. You have to start with strategy. So, and so the way the course is set up, it's set up like a workshop. So I'm anticipating, I already have some consultants that are going to take this and use this as a workshop with their clients. And so I think a PE firm could do something similar, either hiring a consultant that's capable of this conversation or doing this where they go into the portco and say, hey, there's an annual strategy that needs to be set. Right. And the annual strategy needs to be set based on the 10-year vision. And so we need to go through a series of exercises with your team in order to inform that strategy. And then out of that strategy comes the plan for that year in terms of what objectives they have, what they're going to try to improve upon, as well as the goals. And so then once the objectives and goals are set, then it's like, okay, well, we all believe in this strategy because we built it together, right? And these are the objectives we agreed that we would go after. And these are the goals that we settled on, we compromised on. We're not going to fire you if you miss these goals, but this is what we're going to try to do this year. And therefore, we need to measure the inputs and your outputs in order to see whether we're on track. Because if our sales cycle is 9 months and we're in month 3, we need to know that we're doing the work that's going to result in the outcome in 9 months, right? So I think that's the way that I would approach it. I would almost even skip the latter half of that conversation and just say, we're going to build a strategy together as our first step of acquiring you, right? It's like, we have a process we follow to set a strategy. It'll get documented. It'll help engage everybody in your company in that process so they all feel a part of it and they're all motivated to execute it. That's the way I would approach it is doing it that way.
Okay.
And that's why I added strategy as first step, because what I observed is so many companies, not just PE or portco companies, but so many companies skipping that step. And then what happens is like, all right, we're going to do LinkedIn publishing this quarter, or we're going to start a podcast this quarter, right? It's like, and then the podcast doesn't miraculously produce new customers for them. So it's like, that didn't work. Right. We're going to try.
Doesn't work for companies like yours, doesn't work in our industry, et cetera, et cetera.
Exactly. And so then they just keep trying things half-assed, never quite figuring anything out. Whereas if you said you had a strategy and you've really defined what your ICP is, you define the positioning, you define the problems those typical customers have, you could then create a list of experts or even prospects that you would bring onto your podcast, and I guarantee you that podcast will work better.
Absolutely.
So I think that's why strategy is so much.
For sure. You know Steve Lashansky, right?
Yes.
He's got a good book on strategy.
Yeah. I don't know what it is. I know his name, but I don't. What is the book?
I can't think of the name of it.
Okay.
But it's an interesting look at how to set it. All right.
I have I'll show you. This is half the pile of books that I read. Oh, we're gonna go over here to help put together this course. I have another pile over there that's twice as big.
So you're not a Kindle guy.
Put a lot of effort into reading strategy books. And what I found is there isn't many books that connect strategy, planning, and execution, because they really require 2 like 2 or 3 almost different ways of thinking.
Right.
Strategy is like, there's no constraints. You have to really think big. You have to understand your customers really well. You have to like do market research. You have to understand market trends. Like you really need to have an externally focused mind to really come up with strategy. But then you get into planning and it's like, I'm dying here in a spreadsheet, right? It's like, oh yeah, I'm sick of this. Just like, let's just set the goal, right? And then execution requires such a cadence of activity and repetition
and boring crap that you got to just do.
Like, so those are they're almost 3 different worlds. Right. So I have found no books that cover those 3 things. And so what I try to do is cover those 3 things and make the connections between the things so that it's one process that a company can follow.
So are you publishing your course as a book?
So I published the course. My plan is to get it out there, work with consultants like yourself and others, and work directly with some companies to implement it and continue to refine the methodology from there, gather proof points, et cetera. And then, yes, I plan to write a book on it, but it'll be a different title. I'm not ready to share that yet because I don't want somebody to steal it.
All right. So back to the benefits. If we build the discipline of collecting the data correctly and we collect the right data to help us align activities with the strategy, then the business intelligence orientation, and particularly with the AI capabilities laid on top, can actually provoke additional understanding, can't it?
Yes. And say it one more time because that was so good. Say it one more time.
I'd have to go back to the tape, but essentially, we got to make sure that we're collecting the right data. We got to make sure that the data is correctly collected, high quality, and that it aligns around the strategy so that we're tracking the right things. But that's just baseline. And now, rather than just report metrics, the business intelligence capability frames it in a higher level context, and then AI helps us develop really creative insights on top of it.
Yeah, you got it. Yeah. So first step is setting your strategy. Again, you're going to be doing things in your strategy that you may have never done before, so you don't know how it's going to perform. I think benchmarks can help in that area, which is why we spent so much time figuring out benchmarks. That's why we run market research surveys to understand business processes and try to connect them to performance. But you're going to be making a bunch of bets. But then when you sit down to do your annual plan, you really have to look at what you've done, what the trends are in your performance, what the correlation between activity and output or outcomes are. And then you're modeling your performance based off of that. You have to factor in seasonality, maybe. You have to factor in an impact of change in something that you either anticipate happening or something you're going to try to cause.
Right.
And that's where modeling requires so much historical data to be as accurate as possible. Yes.
And then in terms of benchmarks, you could basically establish benchmarks by watching what's happening, but you could also create benchmarks for, maybe even at the unit level or the portfolio level to compare individual portco performance against the aggregate, right?
Yep. People use the word benchmark to mean 2 different things.
Okay.
I don't like it. I prefer to keep it pure. But a lot of people will say, we benchmarked our performance, which what they mean is they just gathered historical data to see the impact of this activity on this result. And that's good. Like that, everybody should do that. It's written into the course. But I don't consider that benchmarking. I just consider that gathering your data and analyzing trends. And then there's the second definition of benchmark, which is the more pure one. It's based on the statistics, people have been using, teaching in statistics forever, is that you're comparing your performance against a population of similar companies, and you're seeing how you compare in that population. So you're saying you should be able to get to the point, if you have enough data, to say that, hey, we outperform 70% of the companies in our cohort, or 70% of the companies like us based on these characteristics of those companies. And that's really hard to do. That's something that's built into our product. We will never have enough data to help everybody answer every business question, but we have high-level data across lots of different company functions or lots of different tools that people might use, and we can allow people to see how they perform roughly compared to companies that are similar to them, as long as they're willing to broaden that group of companies a little bit. We have thousands of companies opted in. So,
and then you can set targets.
What you're saying is another level, which is we have a lot of agencies have done that, where they actually create a group of companies that they handpick.
Right.
So saying like, we're going to have these 50 companies in this benchmark, and we're not going to tell you who those are, but we'll tell you that the criteria of those companies. So for example, we have a partner of ours that only works with mental health clinics, people that, doctors, therapists that offer mental health services. And they have like 200 of mental health clinics where they manage the marketing for them, marketing and advertising. And so they're able to go into any one of those clinics or any one of their clients and say that your budget is here compared to these other 200 companies. Your your cost per click is here. Your conversion rate is here, et cetera. And then that way they can give confidence to at least 50% of their clients that they're outperforming. And for the other 50%, they can go in and say, hey, we recommend you do these different things.
But presumably they could do that with a prospect too.
Yeah, exactly. They use it for the prospects. Yeah.
And I would think that a private equity fund could do that as part of their diligence. Say, we want to understand how you compare to similar stage companies we've acquired in the past to see what the impact will be.
Yeah.
But then there's individual targets. So if you know that your coverage ratio needs to be 3x and the qualified pipeline due to close in a certain period falls below that, then Databox can create an alert for whatever level is monitoring that stat, right?
Yeah. You just monitor, whatever. I assume it'd be pipeline created or, total pipeline in a certain stage or whatever you want to use as your 3x number. Yeah, we do something similar where it's like we look at the deals created and the deals that are in a certain, I think, a qualified stage. And we want 3x coverage there in order to hit our goal at the end of the month and quarter. So, so you could set up an alert. We actually have what's called smart alerts where you can just pick the metric that you want to track or the metrics that you want to track, and it'll determine whether it's out of range or not. And so if it's out of range, you'll get an alert. So you don't even have to set a threshold, but you can also, we have alerts where you can set thresholds.
We talked earlier about trying to get IT comfortable with the idea of making these connections, but mechanically, what's involved in setting all this up?
The first step is just connecting to the data. So let's just say that a company is using Google ads and Facebook ads and HubSpot CRM or Pipedrive or Salesforce, whatever. And then, maybe they have some homegrown database to track customer order shipments or whatever.
Or typically an ERP, maybe.
Yeah, an ERP, of course, right? So they connect those. So some of those connections are really easy, like Google Analytics, Facebook ads, Google ads, HubSpot CRM, et cetera. They could literally just log into our tool, create a free account, and then they basically click the button that says Google Analytics, and then it prompts them to share their Google Analytics credentials. It's called OAuth, so it's completely secure, meaning that we never see your actual credentials. They're sent right to Google, and Google basically sends our application permission to pull data from there. And then Google, of course, then tracks whenever we pull that data as well. So, and then you can log into our tool and see which systems we have access to and when we last pulled data, and you can even see what data we pulled. So that's the setup process there. For a database, it's a little bit more complicated, but not much more. You're basically connected to the database. Once you connect the database, you can then see the tables of data and this in Databox, and you can do your joins in Databox. You can filter data. You can do calculations across rows or columns of data, and then ultimately create a metric from there. So you need somebody that's familiar with the database schema to do that. Like, it gets a little complex if you're not comfortable with database schemas.
But you're never changing the data in the source?
Oh no, we don't. So we don't do any writing. Yeah, we just read.
Okay.
Yeah.
I feel a little bit obnoxious asking you this question on the day of such an important launch, but thinking towards the future, I'm this impatient bastard. What else should people know about Databox and kind of what you're building toward?
So we have a thesis. Our vision is a world where every business decision is informed by data.
Okay.
It's obviously most people would say that's unrealistic, and some people would even argue that that's even the right thing. But that's our vision. In order to get there, we believe we need to make it a lot easier for non-technical, non-analytical people to be able to measure at least their own performance in the context of the business. But of course, be able to also have visibility into the rest of the business's performance to inform their decisions. I think a lot of companies operate very much in silos, where the marketing team reports their performance up to the CEO, and the sales team does the same, and the operations or manufacturing, and like there's only a few people at the top that have a complete view.
Right.
We strongly believe, and evidenced by data we've gathered, that companies will perform better when there's more transparency across the org, because then decisions don't always have to go up. Decisions can occur even without collaboration, but more importantly, can occur between individual functions without it going up and down the chain, because it's a lot easier to see how, what if you know what other teams are measuring and how they're performing. It's a lot easier to see like, hey, there's a challenge there, or hey, there's an opportunity there. Here's the number. Here's how I think it could impact you, and then there's an easier way to work together, even if it's just idea sharing.
So you've got a big vision. This isn't about a software company that makes it easy to build dashboards.
No. We're much more excited by the ability to help companies improve their performance by being more data informed.
Which I think ties back exactly to what a lot of these sponsors need. It's what they want. They're just not quite sure, in my experience, how to do that across a portfolio. So I think this is a really exciting opportunity, notwithstanding some of the frustrations you had in trying to dig in to understand how that market might work.
Yeah, like that was a few years ago, and that was the high. Yeah, it was high times in PE and VC.
So money was free, deals were abundant,
deals were flowing, right. And yeah, exactly. And now we're in a very different economic environment.
Got it.
For multiple reasons, I think. So, yeah, it's not something like we're like pursuing from a marketing and sales perspective, but we're set up really well to solve for it. And it seems like such an obvious thing to me that a PE firm would want that visibility.
Right.
In fact, when I started helping marketing agencies, like in 2017, with this problem, I would go to the owner of mid-sized marketing agencies and I say, how do you monitor the performance of your clients? And I didn't mean like, how does his team do it? I meant, how does he do it?
Right.
And I got so many I don'ts. They're monitoring their finances and they're trusting their team for the retention and upgrades or upsell of their individual clients. And they don't, a lot of them didn't even inspect that.
Wow.
They wouldn't even sit down with their account managers and say, let's look at your book of business and see where the growth is, see where the risks are, see what your angle is. Like a lot of them weren't even digging into that. And so I was surprised by that. There was some that were, but there are more now. Is one of the things we built was the ability to be able to aggregate that data in one view and see how KPIs compare across the whole client portfolio and how goal performance is. Even if a client has 5 goals set up or 10 goals set up, you can see that across for each client. Right. You can see that and see how they're performing. So we've solved for this problem. So yeah, I'd love to figure it out. I think
all right. I will drop links to our last session. I'll drop links to your website. Is there a separate link for the course that I should include in the show notes?
Yeah, it's just predictable scale, databox.com/predictable-scale.
Okay.
But if you Google predictable scale, we're number one.
All right.
Still can do SEO a little bit.
Cool. All right. So real quick then, let's revisit this marketing topic. It's a year and a half since we spoke last. Okay. A lot has changed. What's your take on where B2B marketing is today and where's it going to be in a year?
My bandwagon repetitive thing that I say is it needs to be multi-channel, multi-format, multi-perspective. Those 3 things your content needs to be. I think most companies were very spoiled by the rise and dominance of Google. There was this amazingly efficient path to market where you could create educational content, and Google would distribute it for free, and you could then convert those ideal customers that were interested in that information into identifiable people and sales. So that gravy train is over. People still use Google. especially, my grandmother. She still uses Google. She hasn't learned to use ChatGPT. She probably never will. But more people are getting that information directly through ChatGPT or Google Gemini or just AI answers in Google. So the game has changed drastically. And because that channel is no longer dominant, marketers need to look elsewhere. And when I look at our data, I can see that about a third of our customers are either repeat customers, like they moved to a new company, or referred by a customer. So like a third of our marketing is a byproduct of us having a compelling product and offering a high level of service to our customers. The next 1/3 is search and ads. So we've had to replace our organic search traffic with ads. We had to increase that budget, spend $1 million this year, which kills me on Google ads and LinkedIn ads and other stuff. And so that's still important. But the last third is all other channels that require content. So it's mostly what we would consider social media, including YouTube, LinkedIn, Facebook, Instagram, TikTok, Reddit, forums, Slack groups, etc. So podcasts, I would kind of even put in there. Like you have to be creating content on every one of those channels, which therefore you have to do it in multiple formats. It's not just written, it's not just audio, but audio, video, written, right? If you can think creatively about apps and other things that you can distribute through those platforms, even better. And then it has to be multi-perspective. Nobody wants to read like you saying the same thing over and over again. But because of the way social media works, most social media sites, you have to be repetitive. And so therefore, you need to incorporate other people's perspectives, your customers, your partners, other thought leaders in the industry, people who are prospects, even using other competitor products, right? Like you need to bring those people together on social and not just share your own opinion, but share theirs. So you need to collect that.
But so much of this comes back to your foresight in building that primary research, because that's a fuel for a lot of what you're talking about.
Yeah, exactly. And like the benefit to us of doing primary research now for 9 years is that we have other people's insights, and I can write a piece of content that represents both sides of something. Or multiple. Hopefully there's more than two.
That's great.
It's not our politics, but there's usually more than two, right? Perspectives. So by sharing those perspectives, I am hosting the conversation. I am pulling the people in that conversation, whether they agree with me or somebody else or whatever. They're now discussing with me or in an environment that I at least influence. I don't control my LinkedIn profile, but I at least influence what goes up there. So that is key, is that multi-perspective. A lot of people get the multi-channel thing. That's easy. A lot of people get the multi-format thing because they watch videos and read stuff. But the multi-perspective thing is the really critical thing. If you want to engage people on social, you have to incorporate other people's perspectives.
Wow.
Yeah.
Good stuff. That's from 20 years, I think, of being intimately involved with digital marketing. So valuable insight.
Yeah, and sales, right? I think it's a combination. Right. There's a lot of digital marketers that don't get that. They start with their company strategy, then they come up with their marketing strategy, and then they just want to put that out and everywhere. And I don't think they get that. Like, people don't just listen to you say the same thing over and over again.
When I look at what marketers are doing today, I come back to the Upton Sinclair quote, and I quote it often, that it's hard to convince a man, and that's generically a person, hard to convince a man of something when his salary depends on not understanding it. And marketing agencies their business model is based on just doubling down on the marketing.
Yeah.
Cool. All right.
That's a good one.
Great conversation, Pete. Thank you so much for joining me.
Thanks, Ed. Look forward to next steps with the PE stuff.
Yep. And for those of you tuning in, especially those coming back after an absence and being patient with some of the unpredictability in episodes, thank you. I'm very grateful for your time and attention. Please like, share, comment, and subscribe to the Industrial Growth Institute podcast.
Thanks for tuning in to the Industrial Growth Institute podcast. If you're serious about industrial growth, subscribe, leave a review, and head to edmarshconsulting.com to keep the conversation going.